Hello, everyone. This is Andrew Berman from National Mortgage Professional Magazine. Thank you for watching another Mortgage Leadership Outlook. This is a daily series that we put together with some of the greatest leaders in the mortgage business, designed to do a couple of different things. And first and foremost is just kind of get inside the mind of some of these great leaders, just hear what's going on inside the business, inside their business specifically, and inside their head. So we want to do that. And we're hopefully going to inspire some of our viewers to share these messages, to do what they can to be their leaders in their communities, in their corporations, in their families. So today, so excited about this guest. This is someone actually, when we talked about, the Leadership Outlook series, Jeffrey was one of actually the first people we picked out. We knew actually that he just would be great about this. So just a kind of a little, by the way, if you are joining us, please make sure you share this, get people invited here. You want to tag people, please tag people, but make sure people are watching this. So we'd really, really appreciate it. Right now, we've got people connecting in from Facebook, people connecting from YouTube, people connecting in from Twitter. So hello, everyone out there. So please do us a favor, share this message, get us out there. And without further ado, I'm going to continue on here. So Jeffrey Tesch, who is the Chief Executive Officer of RCN Capital. RCN Capital, they're a nationwide lender for fix and flip, fix and hold. But one of the things that they've done really, really well is they've helped the independent mortgage companies by empowering them to work with real estate investors. And without further ado, Mr. Jeffrey Tesch. Oh, and I will unmute you too, so we can hear you. Sorry about that. I'm just learning here, so okay. Sorry about that.
Welcome to the whole new reality, Andy. Good to see you again.
Good seeing you too, man. So last time we were just hanging out, but earlier this year, you and I we were in Connecticut at the conference, the New England Mortgage Expo. It was great times. I mean, things were going, rocking and rolling. You guys had lots of brokers around the country that were just, using your product, working with more real estate investors. It's amazing, like how just like whoosh, it just stops so quickly.
Yeah, just like that, Andy. And thanks again. Great to be back with you. The Mortgage News Network. You folks are doing yeoman's work across the country, spreading the word, keeping people informed, and as always, a pleasure to be on with you. And I have to tell you, the independent mortgage professionals reaching out to us on a regular basis, mentioning your great work that you do. So thank you so much. And yeah, you're right. We were together in January at what is really the East Coast largest a regional conference for independent mortgage professionals. And man, the good times were rolling. Everybody was coming up to our booth and talking to us about what their biggest problem was. And as independent mortgage originators, their biggest problem was we have more volume than we have the ability to be able to handle right now. Not only on the conventional owner-occupied side, but certainly our side of the business. Which is, making loans to folks buying, fixing, renovating, and selling, as well as folks buying and holding long-term, providing those mortgages through our independent partners across the country. But then March hit, and boy, it was a dose of reality for everybody across the nation.
Yeah, it's an amazing time. Listen, and so to go from, January, it was exciting. You're right. I mean, like our biggest problem was with too much business, and it was a great thing to, March, all this uncertainty. But so listen, this is not now. I know actually, this is a very different situation in 2008, but this is, you guys were built during a time of a financial crisis. So, while this is vastly different because like it's a health crisis that's impacting the financial markets. But you guys were built during that time. Talk to us a little bit about 10 years ago, what led to the creation of RCN.
Sure, Andy. So yeah, let's take a trip down memory lane, right? So 10 years ago, we formed our company basically as a family office, meaning we used our own monies to start this company and begin making private mortgages to individuals who were buying distressed assets coming out of the financial crisis, the Great Recession. We started very humbly here in Connecticut, just outside of New York City. And our goal was very simple, that we were going to begin taking what was known as hard money and transferring that into a traditional commercial product that our independent mortgage partners, at first we started here on the East Coast, and we slowly but surely worked our way across the country, getting licensed all the way to California, so that the independent professionals could begin originating a reputable, honest, and fair product that was desperately needed across the nation, which is short-term buy, fix, and sell, or increasingly, especially in the last 3 or 4 years, buy and hold for long-term rental. As home prices have increased across the nation, we are seeing this product just absolutely explode. But, Andy, you're right. We started very humbly coming out of that previous crisis, really trying to elevate a product that was in the shadows. And we've done it with our partners across the nation, the independent mortgage brokers. And we couldn't be more proud to continue to be able to provide them all of the tools they need to expand their product offerings and build their business from Main Street on up.
So tell us what was going on in, with your group, when you guys started the RCN Capital.
Yeah. So as I mentioned, we started as a family company, right? So what does that mean? We started investing our own funds, making mortgages. Now, when we first started out, we were just making these very short-term mortgages. So coming out of the previous crash, as I'm sure much of your audience remembers, there were foreclosures, there were short sales riddled across the nation, with banks just unloading in a wholesale mentality assets that they just didn't want to be holding on their balance sheet. And what that provided investors across the country the ability to go in, rehabilitate these homes, and put them back into the marketplace for families to live in. No matter what county, what town you were in across the nation, no one was untouched from that calamity that was known as the Great Recession. But what we needed was private investor dollars going in, providing that liquidity that individual owners needed to be able to make those loans, give the investors the cash they needed. And then at the end of the day, you end up with homes back on these streets with families living in them. And the fact that we were able to do that, we were able to participate with the independent mortgage professionals originating those dollars back into the home communities, Andy, we just couldn't be more proud.
So what were you doing before then? So here you are, so you had the capital to deploy out into these mortgages when you started doing this, and it's a great thing to be able to do. But what was the background before this?
Oh, sure. Absolutely. So we started very humbly with a partner who owned a software company who had an amazing amount of liquidity. He partnered up with us. We formed this company known as RCN Capital to be able to really provide those dollars into the space. On a personal note, myself, I was in the franchise business. I owned restaurants, but what my real passion was real estate investing. I owned homes, I flipped homes, and I tell you, I always loved real estate, for a couple of reasons. One, to me, that was the backbone of the United States, and we're seeing that today. Real estate, while it caused the last recession, in this particular recession, I believe that real estate is what's going to take us out of this recession just because of the pure strength. But yeah, for me, my background was entrepreneurship and real estate, and getting into the business of providing those loans. It's been a pleasure, Andy.
Interesting. So now, were there lessons that you learned as a real estate investor where you said, something, I wish there was this for me? Like, what were some of the things that you did? Because I'm sure at some point, you were looking to be able to do more with your capital, so you were looking for financing. So what was there something that influenced your say, hey, listen, we got to do this the right way because I want to handle the younger Jeffrey Tesch that was out there investing?
Sure. And that's a great question, right? Like, what did I see in the marketplace that I thought taking a very niche product and elevating it to a commercial status, what did I see in that marketplace that really thought that we might have something? So first off, the term hard money, which basically means asset-based lending.
Yeah.
Hard money truly was hard and continues to be hard. It was a hard transaction. It was a non-transparent transaction. And it was, to be quite frank with you, Andy, very shady. But the advantages of using that hard money lender, who's basically a wealthy individual, you go to an attorney's office, you sign some documents. The advantages of that hard money is you're basing the loan on the asset value, not so much on the individual. And even today, as we underwrite our deals, whether it be short-term bridge, fix and flip, or longer-term asset, we're using that same methodology, which is looking at the asset value and how that asset value is going to return, whether it be on the quick sale side after renovations or long-term property debt to income. How much is that tenant going to be able to pay over time? And what does that 30-year mortgage look like as an investment? What I saw was the ability to take the shady practices of hard money and elevate it so that we put in best practices so that RCN Capital would always be known as the place where you could go and be treated fairly. It sounds really simple, Andy, but at the time it was kind of unheard of. It was hard money. It is what it is. A guy that knows a guy. So why would you need anything more than that? But what we thought, and specifically myself, was if you treat a customer, and some of this comes from my restaurant background, if you treat a customer the way they expect to be treated, they will come back to you over and over and over again. And we really took that methodology and put it into the financing sector with our very specific niche, not only from a customer standpoint, but more importantly of how we were going to treat our broker partners across the nation, making sure that they get paid on the HUD, simple stuff that you would think people did. But because of the nature of the business, these best practices that we put into place, Andy, have really paid off with our customers and also with our broker partners across the nation.
Interesting. So when did the epiphany saying, hey, listen, we can go out there, we can market it ourselves, we can do what we need to do to get this product out in the street, put our money on the street, or we could partner with independent mortgage companies and allow them to put this out there for us?
Yeah. And it's a great question, because all the time I meet with brokers and they say, why don't you just go direct to customers? Why don't you just use the lending portal? And I couldn't disagree more with that methodology. And I'll tell you why. The independent mortgage professional knows their community better than I will ever know their community. And I have no business sitting in an office here in Connecticut, outside of New York City, working with an investor in middle America, telling them how I know their community. But when I partner with an originator that is based in their community, and they get to know them and they get to know their needs, and then they bring our products into the mix, Andy, it's just a match that you can't beat. And it's one of the reasons that the independent originator is gaining a tremendous amount of market share on the owner-occupied side. It's unbelievable how the wholesale model works. And to me, I looked at that model and I'm like, I want to bet on the American dream. And that American dream is the small mortgage shop based on Main Street who can sell our product and participate in those economics.
I love it. That's great. So where do you guys get your money from? Obviously, we know where the money originally came from. So where does the money come from today? When you guys are working with the mortgage brokers on Main Street that are working with real estate investors in their community.
Right. So, and that's a great question, especially in these trying times.
Yeah.
Because everybody wants to understand what happens as the financial markets become turbulent, right?
Yeah, I probably should say, okay, in January, where'd the money come from? Okay, today, where'd the money come from? But yeah, please share.
Yeah. So we started off, as I mentioned, as a family office, lending our own monies.
Yeah.
As the years went by, we began to bring on what's known as warehouse lines. You have a very wide and varied audience here. Everybody understands what a warehouse line is, right?
Yeah.
So we participate on that warehouse line. We hold those loans. We service those loans. So it's our money at risk along with the bank's money at risk. It's a very efficient model. It gives us leverage to lower pricing, but it doesn't give you nearly as much leverage as what does a securitization model does. So there's three buckets that we have at RCN Capital. We've got the buy, use our own cash, and hold the loan for the life of that loan. Pretty much that would work for the short-term bridge product. Then you've got originate, and then put the loan into a warehouse where we put in some of the money, the bank puts in some of the money. Once again, better leverage. And then the final bucket, which is the securitization model. That model, which is by far and large over the past 3 years, the model that has allowed us to get the best pricing, which is subsequently the model that we now use the most, which is we originate, we partner with a large hedge fund who then bundles the loans, very similar to what you see in the GSE model on the Fannie Freddie side, except they're government secured. You want to look at our product as unsecured, a more non-QM model. Our loans get bundled together with our hedge fund partner, and then those securities get sold. Teachers' funds, pensions, IRA, long-term real estate investment trusts, as well as teacher retirements, any sort of vehicles that are looking to put out cash for longer terms. Our loans get bundled into these securitizations, and that's how we're able to drive down our rates. Now, the question is, what happened during the financial freezing up here in March and April? So for us, it was a very turbulent time. The securitization market froze up. We had to freeze pricing. Eventually, we came out with new updated models. And then slowly but surely, as time went on, we got into May, the securitization market began to thaw. We're seeing non-QM loans, once again, going to the marketplace, and things are beginning to return to normal. So it's been a crazy 60 days for us. We paused lending for a short period of time, never paused doing the draws and all of the things. We were fortunate enough to be able to keep all of our employees on the entire time, which we're super proud of. But yeah, it's been a crazy 60 days, but boy, our brokers are blowing up our phones today with both the short-term fix and flip as well as the long-term rental. People are back in the game, Andy, in a big way.
That's great to hear. So what was the darkest day? Like, what was like? Was there any days that where you're like, oh my goodness, what's going to happen? Was there any days where, like, where you were worried about actually the long-term viability of the business?
Yeah, that would be the third week of March when we began to realize that what is known as the securitization or the secondary marketplace, which basically drives all the pricing for these bond sales that fund our debt, basically froze up. So as March evolved, we got to that third week of March, the non-QM market, which is, of course, owner-occupied jumbos and such outside of the GSE loans, completely froze up. Our loans, which are non-owner-occupied residential loans, there was no marketplace. You know, the phone rang, we talked with our partners, and they said, we have no ability to get pricing, which basically meant we have no ability to be able to originate at those given levels, which basically said for us, time out, we need to reevaluate and come up with a new pricing model, because we're going to basically go back to funding with cash, funding on the warehouse line. And that's when it got real, Andy. It got very real for not only myself, but many of my lender partners across the country.
Yep. There's that end of March was not a pretty time for a lot of lenders. So now and when did it start to talk a little bit? You were talking about the thawing. So bring us actually to the timeline again when you said it's you started to see the thawing.
Sure. So what we did at RCN Capital is we did a few things. First off, previous to the freezing of the capital markets, we had already gone remote. You know, we're based here in Connecticut, which is about as close to ground zero for this crisis as you can get.
Yep.
We saw the numbers ticking up. We wanted to get our employees safe. You know, we have a very robust technology system that not only powers our ability to go VPN and go remote, but also we own our own proprietary loan origination system, which we control, which gives us a huge advantage. The Bridge Loan Network software, it gives us a huge advantage. So because we control that, it was easy for us to go remote. So all of our employees dispersed. I mentioned the freezing of capital. So basically we got into April, and then we began to reevaluate what pricing looked like. So by the middle of April, we had come back out into the marketplace with a higher coupon, lower leverage product that we were basically balance sheeting. Yeah. Of course, there was a lot of shock in the marketplace, where investors were seeing between 200 and 300 basis points higher pricing and between 15 and 20% lower leverage. Investors were like, what is going on? Yeah. But we were back in the marketplace, lending.
Better than nothing. Better than nothing. Yeah.
So from there, we began to really drill down with our capital partners. And when we got into May, it was clear to us that the thawing of the securitization market was beginning. So last Monday, we rolled out our 30-year fully amortized investment loan for non-owner occupied residential housing. So buy, put a tenant in, and lend it out. We went back into the marketplace last Monday, and we followed up with that 2 days later with a middle market short-term rental loan, as well as a much lower priced fix and flip loan from where we were. So now we're back down well under 10%. Of course, interest only. So the quicker you flip it, the quicker you pay off these loans with no prepays. But boy, it was a scary time. But coming back into the marketplace, empowering our brokers to be able to earn not only on origination fees, but earn on yield has been tremendous.
Yeah. And before I forget this, what does RCN stand for?
So great story. So 2010, it's myself and a loan officer, right? And, you know, .com is everything. You know, when you're trying to build a business, if you don't have a memorable name that, first off, people will always have quick recall on, but just as importantly, they can actually spell it, which isn't always an easy factor for, you know, people who are trying to put out a .com. Yeah. 10 years ago, never mind today. So I wanted to convey what we were doing. And in that time, it was very simple to me what we wanted to do. We wanted, as I mentioned, professionalize the lending business. But really what we were doing is we were taking rehab dollars and putting them into the marketplace just as quickly as we can. And I thought to myself, what do people remember? Well, they always remember cash. Cash, everybody loves cash, right? Yeah. So I'm plugging in words and I'm trying to figure it out. And I said, wait a minute. rehabcashnow.com. Done. Simple, easy to remember. And that was our brand coming out in the very beginning when we had no marketing department, no dollars. It was literally myself and a loan officer in a little tiny room with 2 computers and a couple of phones. rehabcashnow.com. We slapped it on a logo. We put it out into the world and we started making loans. And of course, as we evolved into a much more sophisticated financial company and we added products, the longer term rental and the multifamily apartment lending, we transitioned to RCN Capital.com.
Yeah.
But yeah, true story.
It's great.
And I know my marketing director right now is cringing. I don't want to remember Rehab Cash Now. I'll never stop telling that story, Andy.
You got to be true to your roots, Jeffrey. So. Yeah. So listen, so you are passionate about this. You guys do webinars. You're very involved in the real estate investor community. It's clear that you have a love for this business. When was that point actually where this became, more than, hey, this is just a good new business opportunity to something that you have a passion for? And I don't know, maybe you have that same passion in the restaurant business, but I mean, you can tell you love this, you love working, and you love empowering the independent mortgage originators. So when did that come about?
Yeah. So, when I started in the beginning, as I said, for me, this was, this is a good idea, but it's really only going to work if we can scale it, right? Like if we couldn't scale it, we were just getting a return on our money. And wouldn't it be easier to just give it to a fund manager and them write us a check every quarter for the monies that they've invested? Yeah. The only way it was, yeah, exactly. For me, it was the only way this was really going to work is if we had the ability to scale it. And we, for the longest time, I would say probably the first 24 months, it wasn't really clear to me whether or not we were going to get any traction more than just from a regional. In the beginning, we were driving to meet customers and going out to job sites to look at. That was nice and all, and it was good to meet those people. But once again, it wasn't clear to me whether or not we were going to be able to scale it. But once I began to really invest in some of the technology that allowed me to be able to, number one, market in areas that we hadn't been before, taking advantage of all the Google algorithms that are out there and be able to put our brand in front of people. Big shout out to our marketing director, Erica, who was just instrumental in that. Yeah. And then from there, from an operational perspective, I wanted to be able to deal with not only the customers, but the brokers remotely. That was the only way it was going to work. So once we started investing in really the technology behind what powers RCN Capital, that's when it became apparent to me that, hey, you know what? We might really have something here that I can be that local brand in the hometowns across America, financing those investors via that local residential mortgage broker. And we would really have the ability to be able to be the hometown lender while being remote here on the East Coast.
That's awesome. That's a great power to be able to do that, to be able to scale it. So I got to ask, like, today, where are the opportunities? So, like, if originators are watching this, what can they do today, to find opportunities to work with real estate investors? Obviously, they're not going to their local REI meetups. So, where are the opportunities today to find the investors that are going to work with your kind of products?
Yeah, absolutely. So the first thing I would say to your community is reach out to RCN, get signed up as an independent broker. There's no fees. There's no arduous process to get signed up. We will dedicate a one-on-one account executive to walk you through the process on not only how to get signed up, but how to market your business in your local community. And we're super proud of what we have here and our marketing department that absolutely gives all of the knowledge that we've gained at RCN Capital over the years and basically transfers it to that local mortgage professional, whether it be white label documents, whether it be broker education, how to originate leads. All of this we give to our broker partners for free because their success is our success. Yeah. We're going to win together. And that's how I see things going forward, Andy. It's a win-win situation all the time.
That's fantastic. Listen, I love it. Love the concept. Love what you guys doing. Love the tools that you give the originators. I mean, listen, there are originators out there right now that have never done a deal with real estate investors, have no clue, and plug into your tools and instantly, not instantly, but within actually a matter of days or weeks, being able to speak and talk to real estate investors, know what's going on inside their mind, and be able to offer them solutions when there's not a lot of solutions out there today.
Yeah, and that's a fair point, right? Like the turn time on being able to speak the lingo and understand the products is rapid. First off, all of our broker partners across the nation, you folks are already the experts in residential lending. The only difference here is instead of it being a family moving into the house, it's an investor buying the house. You are already the expert in the single family house. And that's what we do, Andy. We make loans on single family houses across the nation, except it's for a business purpose versus a residential family purpose. It's not a heavy lift learning how to originate this product. And, I've said it for years. Many of your listeners and viewers today, they've seen me doing my speeches at all the various conferences across the country. It's just this simple. It's a product that you might not sell every day, but it's a product that must be in your business model because there are investors in every community across the United States. So it behooves you to bring this product in for you and your team so that when that ask comes, you don't say, oh, no, we don't do investment loans. I'm sorry. We don't get involved in that. That day is over today, Andy.
Well, and we got a comment here from Martin Waring. RCN has great loan platform that makes hard money lending as close to wholesale residential lending. Great people. Stanley is awesome.
Oh, that's really nice. Martin, thank you so much for the kind words. Martin gave a shout out to one of our senior account executives here, who is just an amazing broker trainer. He gives the broker all the time that is necessary to make them the experts in their community. And that's really what we do, Andy, is we make that local broker the expert in this product that, whether or not they choose to promote it, we give the white label docs, we give all of that education, all of the support so that that local broker can get out into the community and promote the products. But at the end of the day, it's the people. It's the people, Andy. And the one-on-one relationship between the account executive here and that broker in any town, USA, that's what makes the difference.
Fantastic. Martin, thank you so much for that. And I'm going to go back to this comment also. Jenny wrote this earlier. Yes, Jeffrey Tesch, get to know your customers, be relationship builders, understand their needs.
Absolutely. And Jenny, great to hear from you. One of the gurus across an amazing author. Thank you so much for jumping in on today's broadcast. But yeah, that's it. It's all about relationships. No matter whether you're working with that family And, the average time a family is in a home now is up to 8.1 years, as last reported by the National Realtors Association. That's not what it's about. It's about the referrals and them telling you the amazing experience that they had with that independent mortgage professional. Our term time is much quicker as investor loans. Our fix and flip average is 8.4 months. So you can see how this turns much quicker. Yep. And if you're able to get with a single family aggregator who's building a portfolio of rental homes, they're out there shopping all the time. You as that broker, you as that professional, you leverage that relationship and you build on it to build your referrals and build your book of business. I'll tell you, people love to tell a good story. And when they find an independent broker who knows how to get loans closed, those referrals go over and over and over again. And that's how you become the go-to source and the knowledge. Well said, Jenny.
Fantastic. Wonderful. Listen, very, very exciting to do business with you guys. So you have new products out today, right? So it's a great time. Listen, if you're not signed up with RCN, make sure you reach out to them. It's rcncapital.com. Couldn't be more easier than that. So, and hold on, we got a question just came in, if you don't mind. This is from Kate Alexander. What do you think the future holds for RCN this year? Will it deviate from initial planning?
Yeah, and I think that's a great question. And it certainly is a question that we've touched on today, right, Andy? Which is, where were we, what happened, and where we're going? And, listen, I haven't said this go-to line, but I'm going to use it now. There was not enough single-family homes in the United States in February. That is an undisputed fact. Yeah. There is more demand for single-family homes in February than there was supply. I'm going to argue today on May 19th that there is not enough single-family homes than we have. I mean, it's just, you look at the demand and the purchase and sales that are being executed, Andy. Yeah. The demand is there. There is not enough single-family homes today, just like there wasn't in February. And it bodes well for not only the RCN Capitals of the world, but all the independent mortgage professionals across the country.
Yeah, that makes a lot of sense. Listen,
it's going to be a big year. Safety first. Everything that all of our independent brokers have done with the remote showings and all of those things and e-closings, we've adopted all of that at RCN Capital. Safety first, but I got to tell you, I think it's going to end up being a very positive year before it all shakes out.
Yeah, great question, Kate. Thank you so much for submitting that. Yeah, I mean, listen, you don't have new home construction going on, so it's or at least for the most part, it's been paused. So it makes more reason that your products are going to be more important. The kind of properties, I think it is a huge opportunity, and just finding the right partner to work with. I think it's awesome that you guys have the technology in a place that really didn't have technology. I mean, you go back, it's like you're like the hard money lenders was a step above Vinny down the block. And then actually come along RCN that makes it so it's also a little better than a little less expensive than hard money. And when you systematize the process, make it more predictable, that's what everyone loves about residential lending. It's relatively predictable. When it comes to hard money lending, not so much. But when it comes to working with you guys and having actually the ability to have the technology behind it, it creates a little more predictability, I feel, at least.
Yeah, absolutely. And it went back to, the initial roots that I mentioned in 2010. We always wanted to do what we said we're going to do. If we issue a commitment letter, it's a commitment letter. And, while that sounds simple, it's really not how the business worked at all. But empowering our brokers to have the certainty of close and the certainty of how we're going to get their customers across the finish line, it's everything. It's everything, and we're really proud to be that broker partner.
Fantastic. All right, Jeffrey, Thank you so much for spending time with us. We really always appreciate the time. If we spoke back in January, then a few years ago at another Originator Connect event. We're looking forward to seeing you out the road again soon enough.
Yeah, we'll be back on the road. Not sure when. It's hard to believe I haven't been on a plane in nearly 3 months now. But it will be coming. It will be coming, folks. Just stay safe. We're going to get there. In the meantime, just keep pounding those phones.
Fantastic. All right. Stick around for just a moment, Jeffrey. I'm just going to take our audience out here. All right, everyone. Thank you again for joining us for another Mortgage Leadership Outlook. We're very excited to have Jeffrey with us. We have an unbelievable lineup of people coming up later this week. Tomorrow, Wednesday, we've got Mr. Eddie Perez from Equity Prime. So excited to have Eddie joining us on Wednesday. Then wrapping up the week with Martin Warren, another hero of wholesale. Martin Warren from Nations Direct. Join us on Thursday. We are going to take a pause for next week, just so we can allow everyone to just kind of spend time with their family for the Memorial Day weekend. And we have an unbelievable list of surprises coming up the following week after that. But stick around, everyone. Thank you for watching. Please make sure you share this. Get this out there. We want people to see this. We're getting some unbelievable leaders together. So thank you for watching. We really appreciate the support. And everyone, have an awesome day and stay safe.